Are home prices going up? Are they going down? Is it ever going to be a good time to buy a home? What about mortgage rates? What in the world is going on with them? Now, if any of these thoughts have entered your mind, then I've got good news for you. You're in the right place, as I'm going to break it all down for you in this month's real estate market update. Hi, this is Andrew with the Andrew Smith team, eXp Realty in Frisco, Texas. And first and foremost, I'd just like to point out and share with you that my goal with this video is not to convince you of anything. It is simply to provide you with the latest information and to provide some perspective and some insights that allow you to make the absolute best decision for you and your family. Everyone's situation is different. And what is right for one is not right for the other. So take what you want from this, leave what you don't, disagree, agree, either way. This is purely information for you. In this market update this month, what I'm going to share with you is information on home prices. There's been a lot of confusion about where they're heading and what is going on with those. Okay, and it's been on the minds of a lot of the potential buyers that I've been speaking to. Then I'll shift my attention to mortgage rates, and I'm going to update you with the latest information on those rates and provide some perspective on whether you should wait for mortgage rates to fall before making a move. And then lastly, we now have enough data and the leading indicators are out there to give us a reasonably good idea of what the first quarter of 2024 is starting to look like. So with regard to home prices, Black Knight recently just came out and said that for the second month in a row, home price growth trended higher in every one of the 50 largest US markets, mirroring the sharp reacceleration at the national level. So what does that actually mean? Well, you may recall prices were expected to fall this year. And rather than falling, prices have actually been ticking up. And over the last couple of months, the pace at which they are ticking up has been accelerating, meaning prices have been going up stronger and more than originally expected. As a matter of fact, you may recall, if we just go back to December 2022, this is what the forecasts were for home prices across the country. They range from anywhere from a decline of 0.6% all the way up to a decline of 20%. Well, based upon all the latest information, these forecasts have all been updated. And then you can now see that they're now looking at home prices being flat or up as much as 6% in 2023, which is crazy to think of where we were not that long ago. And if you're confused, you should be. I mean, the experts are confused. The information is all over the place. I want to provide a little bit of perspective here. When you start talking about mortgage rates accelerating and decelerating and what that actually means. So what you're looking at right here is the 49-year average of monthly price movement. So this is month over month changes in prices nationally, covering a 40-year period from 1973 to 2022. And you can see here, when the year starts out, the pace of appreciation is relatively flat. Then prices start to go up faster in March, April, May, and June before turning and then starting to dip off. Why? Why is that? When most of the buyers are out. We all know that spring is the busy season in real estate. We start the year slow, it gets really busy through the spring, and then as we start moving into the summer, a lot of families are getting settled. They want everything taken place before school starts, and it starts to taper off. This, again, is a 49-year average. Now, I will just point out here that when they talk about home prices decelerating, they're not talking about prices heading negative. What they're talking about is this: the pace of appreciation is decelerating. Think of it as like driving your car. You slam that accelerator to the floor, you increase your speed really fast. What happens when you take your foot off the gas? You start decelerating, you start slowing down. Doesn't mean you've come to a stop, it means you're slowing down. And that's exactly what we're seeing with regards to home prices. Now, if you're patient and time of year doesn't impact you as much, you can kind of see here that September through about January is not a bad time to enter the market. There's a whole lot less buyers out there, which means you're not competing with as many people. And generally, the sellers selling at that time of the year could be a little bit more negotiable than they would be at other times. So, what's 2023 look like? Well, here's 2023 in relation to the 49-year average. So, what we're seeing here is that in January, prices actually dipped over month in January slightly. And then once we got to March, everything took off. There's the reacceleration that the quote at the beginning was talking about. Prices are ahead of the historical average. But what we're starting to see here, and this is from Case Shiller, and August is the last month that they have available. But you're going to notice here that price appreciation towards the end of this graph is suddenly getting a whole lot closer to where it has been historically. But the overall question is why? Weren't prices supposed to tank when mortgage rates went up? Yeah, they were, but it hasn't happened. So why is that? Well, the reason home prices haven't come plummeting down is inventory. So if you've seen any of the videos I've put out this year, you'll know that one of the things I talk about all the time in its simplest format, cut all the fluff away, home prices are simply a matter of supply and demand. What happened as mortgage rates soared, all of the experts predicted that demand would be slashed. And it was. We all know that. Whole bunch of buyers went to the sidelines, and the number of home sales are way down year over year. You've been hearing that on the news constantly, but that would lead you to believe that the market's on life support, and it's actually not. What the experts didn't predict is they didn't predict inventory to fall as fast as it had. Let me show you what I mean. This graph that you're looking at here is showing Frisco's inventory going all the way back to November of 2018. And this right here is the reason why home prices have stayed strong and haven't fallen the way it was projected to. If we go all the way back to the end of November 2018, you can see that there was somewhere right around 900 homes for sale in Frisco, 900 homes on the market. And you can see that all the way through the COVID years, how much inventory plummeted. Did we come back up last year and into this year? Yes, we did. But even now, we've already turned back down and are starting our normal seasonal decline. As of right now, there's about 320 homes on the market in Frisco, less than half what there were in 2018. That is why home prices have stayed where they are. Even though mortgage rates are really high, demand is still strong enough that home prices have not fallen due to the relationship between supply, which is really low, and demand. Considering what's happened with home prices, it's no surprise to anyone that home affordability has really taken a beating. So there's two main factors in affordability. You've got the home price, and then you have mortgage rates. Now, we've already seen that home prices are not falling. They're not falling as was originally projected at the beginning of this year. And, as of right now, which I'm going to show you momentarily, they're continuing to hold steady because of the lack of inventory. Now, looking specifically at affordability, it's no surprise people are pausing, wondering exactly what to do. And when both mortgage rates and home prices are sky high, it's as if home buyers are being squeezed from both sides. Now, this chart that we're looking at right here is showing us how the average mortgage payment has changed over the last 2.5 years. So back when mortgage rates were ultra low, the average mortgage payment based on the average home price was $1,011 a month. That was just in January of 2021. And as we move from left to right here, you can see we get into the red, the danger zone, as how much mortgage payments have changed in order to buy the average priced home. As of August 2023, that had more than doubled to $2,240. a month. So it really begs the question, as a home buyer, what are you to do? If you've been sitting on the sidelines waiting for home prices to fall, we can see that they haven't. And then I'll show you what they're going to look like coming forward in the first quarter of 2024 here shortly. So, should you wait for mortgage rates to fall? Well, we've been thinking that they've been going to fall all year, and it hasn't happened yet. I came across this recently and wanted to share with you. I thought it was an interesting perspective. So, back here, move myself down here. So in 1972, mortgage rates were 7.45%. And if you had decided back then that you were going to wait for mortgage rates to fall, you'd have had to wait until 1993. And what happened to home prices in that 21-year waiting period? Well, we went from an average, say, or average home price of $29,000 in 1972 to $144,000, $144,500 in 1993. Now, I'm not saying it's going to take 21 years for mortgage rates to fall. That's not expected. As a matter of fact, positive inflation news within the last couple of days has caused mortgage rates to fall. And it's widely expected and believed that they will continue to fall going into next year. But is it going to happen? I don't know. I honestly don't. They were supposed to fall already. Mortgage rates should be lower than what they are right now based upon everything that we were seeing earlier in the year. So, it's hard to know. I'm also not saying that if you're not ready to buy and it's not in the cards right now, don't force yourself into a property. But if you want to explore any and all options and see if it's even feasible for you to consider buying, there's a link to my calendar in the description below. I invite you to schedule a call. It's absolutely no pressure, no obligation. It's just to talk through your situation and provide you with all of the options so that you know exactly what they are. It could very well be that renting right now is best for you. Or if you're currently renting, extend that lease, stay where you are. But again, everyone's situation is different. So if you've got questions, please don't hesitate to reach out. So with that in mind, where does it look like it's heading? Where are we going in the next year? And again, as I told you, we don't know for sure, but the leading indicators for what's going to happen in the first quarter are starting to appear. Let me show you what I mean. This graph that we're looking at here, this chart is from the local MLS. And what it's showing us is it's showing us what percentage of the original list price are homes currently selling for. And as you can see right here, just over 97% as of the end of October. I mean, this has obviously come down. Back in May and June, it was back up to 100%, still nowhere near the 110% we were in the middle of last year, but 97% of the list price. Why is that important? Well, that's telling us that based upon the latest information, homes are selling within, they're not being discounted, I should say, more than about 3%. So now as I flip back over here and we look at the current median list price in Frisco, you can see here, let me take the 90-day trend, let me take the 7-day trend off, look at the 90-day trend. Although prices have been trending down, which they normally do this time of year, they are actually starting to hold fairly steady. All right, so if I go back here, this is what I mean. You can see when I go into the 7-day trend, you can see since roughly the end of September, beginning of October, we've actually been trending fairly flat, 699, 900 to 704 right now. Why is that important? Well, if I scroll down just a little bit and we look at our different market segments, this is days on market. And you can see that 42 on the low side, 56 on the high side with regards to homes taking to sell. So overall days on market. Now, the reason that that's important is you've seen home prices have been holding fairly steady since the end of September. Homes that are on the market right now are taking on average about 50 days to sell. So right now, 700,000 is that list price. So if you consider that homes have generally been selling for within 97% of list price, that means they're not going to get discounted more than about 3%. 3% off of 700,000 is roughly 680,000. Now the homes on the market today, they are going to go under contract sometime in middle late December, maybe even the beginning of January, which means they are going to close the end of January, middle of February. That gives us a really good idea of where sales prices are going to be in the beginning of 2024, late January into February. So this is telling me that the prices in Frisco, the median price in Frisco is going to be somewhere in that 680 to $700,000 range as we move into the new year. If, a big if, mortgage rates continue to decline, that is going to cause more buyers to come into the market, to re-enter the market. We've seen that now. Every time there's a mortgage rate drop, buyer activity and mortgage applications go up. That is what is expected, which means the first quarter of 2024, as we start getting into March and April even, our traditional busy season, could see an acceleration of activity that would force home prices up even further. Do I think we're going to end up with a frenzy? Do I think we're going to start seeing bidding wars? No, I don't. I don't think we're going back to that by any means, but I do see slow and steady growth. Now, that doesn't mean that opportunities don't exist in the market today, because they absolutely do. In fact, I'm going to post a video right here linking you to a couple of those incredible opportunities that exist, especially in the area of new construction. And if you're considering making a move anytime this year, 2023, I can tell you the builders are motivated to close properties, especially quick move-in homes, before the end of the year. I know of several deals where we can negotiate quite a substantial price reduction and lock in below market interest rates. So if that's something you'd be interested in, please don't hesitate to reach out. Well, hopefully you found value in the video today. If you have, I'd invite you to subscribe to this channel. Give me the thumbs up, hit that thumbs up and subscribe. I post new videos at least once every single week to keep you updated on the latest happenings in our local real estate market.